The latest consumer confidence data bringing an end to the streak of net negative readings that we've seen from market expectations. Here to break it all down is Yahoo Finance's Josh Schafer. And sounds like a bit of good news.
Yeah, Shauna, good news, and people are excited about it, right? So what we have here first is just the overall consumer confidence index. This is the broad index from the conference board, and you can see a little tick up recently, and it hit its highest level in over a year. That's the broad index. Now, what is interesting is consumers are also now more bullish on stocks. So when you take a look at how they feel about stocks, we had seen this big climb up. Bespoke Investment have been pointing this out for 17 straight months. More people had thought stocks would go down than go up. But that switched this week, or in the month of June, for the first time in, again, 17 months. And it's interesting to think about that in perspective of how long it took us to get here, when we've had a bull market now for over a month, and that rally's really been going on for most of the year. But it has come along with some data. So I want to take a look at housing data first and take a look at the Case-Shiller index. So you can see the Case-Shiller index also starting to pick back up. So what that shows us is housing prices are going up, right? Those actually beat expectations today, as did a lot of economic data, including that consumer confidence we just mentioned. Then you take a look at new home sales, which is interesting to think of when you think of prices are going up. Well, guess what? People are still buying houses too. That's important when you think about inflation, right? For prices to still go up and people to still be buying. A lot of economists are saying increasingly that means inflation is going to stay high. So again, a lot of confidence right now when you think about this robust data. Then you take a look at the labor market, non-farm payrolls. Remember that May jobs report? We had that big $339,000 payroll reading. That was the highest we had had since January. So again, another strong data point. Interesting when you think about what that means for the Fed too, of course. About a 76% chance for a Fed rate hike per CME projections right now. And Sean, I think that's what I'm most interested in when we think about what this means. Positive readings, right? A lot of strong data. That also probably means more Fed rate hikes, maybe 2 more rate hikes. Do consumers still stay confident about markets when we see those rate hikes start to come into play, or do they start to get more negative on markets again, right?
Yeah, and what's been also interesting in the sentiment data has just been the swings that we've seen on a month-to-month basis. And a lot of that, I think, is driven by some of the rhetoric that we're getting from Fed officials, specifically what we're hearing from Powell in terms of the last press conference, the fact that he's saying that, hey, more rate hikes are going to be on the table. They do seem to be on the table right now if they do deem them necessary. So a bit of good news, I guess, in consumer confidence index this month in the overall reading, but whether or not that trend continues, a lot of that dependent on the next move.
And you've got an inflation print on Friday and then a jobs report next Friday, right? That could swing that sentiment and also what the Fed feels in just a few prints. So We'll keep watching the data.
All right, Josh, thank you.